Snap, the parent company of Snapchat, reported third quarter earnings. The stock was down as much as 25% following its announcement. So let's look at the figures and understand why investors were not excited about these figures. The main theme was Apple's privacy policy changes are hurting Snap's ability to sell advertising. Overall revenue increased by just 8% to 1.1 billion in the third quarter, which ended September 30th. Apple's policy changes make it harder for Snap to track user data across usage on smartphones, and then that makes it harder for Snap to sell targeted advertising. Marketers prefer targeted advertising because it removes waste from their spending. And so as this policy is taking into effect, it's hurting its ability to sell these ads. Thankfully, daily active users increased by 19% year over year for Snap. They now have 363 million daily active users. That was up by 16 million from the previous quarter, so they're not having difficulty attracting users. The net loss per share of 22 cents was worse than the loss per share of 5 cents at the same time last year. The company has rarely delivered profitability consistently on the bottom line. They have had a few quarters where they were profitable on the bottom line, but no consistency there yet. Free cash flow of 18 million was down from free cash flow of 56 million in the same time last year. Also, the average revenue per user was down from $3.49 in the same quarter last year to $3.11 in this quarter. Again, this ties into the fact that Snap cannot sell targeted advertising, and marketers are not willing to pay as much if the ads are not targeted. When an ad is targeted, marketers feel confident on the return on that investment. They don't feel like they're going to show a steak restaurant advertisement to a vegan in Miami, Florida, when the steak restaurant is in Los Angeles, California. That would be a wasted ad. There is very little chance that the vegan in Miami, Florida is going to visit the steak restaurant in Los Angeles, California. With targeted advertising, it removes the possibility of showing these kinds of ads to unqualified prospects. And you're seeing the evidence of that in Snap's decelerating revenue growth and also the decrease in average revenue per user. Finally, the stock is down meaningfully in 2022. It was down just over 25% right after it announced these earnings results. But even after those significant declines in 2022, the stock is not cheap by any metrics. These decreases in stock price are, in my opinion, justified because earnings are falling, free cash flow is falling, and the stock was expensive to begin with. If you watched my video on if Snapchat stock is a buy, which I will link to at the end of this video, you will have known that I have recommended investors not to buy Snapchat, that Snapchat stock is not a buy. And I had recommended that before these earnings came out, and now after the earnings are out and the stock is down 25%, I don't see a reason to change my recommendation telling investors not to buy Snapchat stock just yet. I would like to see Snap formulate a response to this challenge they're having with Apple's privacy policy changes before I would consider investing in the stock, or I would like to see the stock price fall considerably more and then I would consider buying it even if they haven't solved this problem yet. So I want to see one of those two things happen before I would consider recommending Snap's stock as a buy. Okay, so that's all I've got for this Snap earnings review. Join me next time for another update on earnings review of the companies that I follow. Thanks for watching. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment, so I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 354% as of September 21, 2022, and measured against the S&P 500 returns of 112% as of September 21, 2022.